Hey, everybody. Very limited time to blast through this. There's a lot of crap going on, and in between trades and everything else, trying to keep my handles on things. So I'm going to go through this real quick. This video today is entitled Crypto Carnage, and there's a lot going on right now. Disclaimer, none of this is financial advice. And the story, well, the age of kickings. It was pretty clear that, liquidity was drying up, sand fell with Silvergate, and now everybody's panicking. But there's a lot of other stuff going on too. So I'm going to talk a lot about banks and liquidity and Hedera, Ethereum, all that type of stuff. But first of all, literally, FUD is at a peak right now. It's pretty clear. This is from the vice chair of the Fed. And in remarks today, Michael Barr, the Federal Reserve's vice chair for supervision, said regulators are investing crypto assets and will issue more guidance to banks that want to invest in them. Well, that sounds pretty darn ominous to me. And it's just like the Operation Choke Point, whatever you want to call it, is getting tighter and tighter as we go forward. In addition, Silvergate fallout, obviously the sentiment towards crypto assets has been extremely negative lately. It just goes from bad to worse. Powell ramped up his Fed's hawkish rhetoric twice this week. The dollar and bond yields have risen sharply, weighing on all interest-bearing assets, including crypto and gold. And crypto prices fell across the board after Silvergate, the bank that was at the center of the industry's growth, decided to shut down voluntarily. This note, I think, is from Razak Zada. He believes Bitcoin could hit 20K, and he's on the money. Let me talk about a little bit more stuff first before we jump into some charts. Businesses that still have Signature Bank, whose Signet platform is comparable to Silvergate Sen, but the company has already said it plans to limit its crypto exposure in light of recent events, and the industry will be monitoring developments. However, particularly following last week's coordinated effort by the Fed, FDIC, OCC to warn banks about the liquidity risks that have come to banking crypto companies. It's as if the loop is closing, the noose is closing, and the government officials are warning banks, like in Europe, stay away from crypto, and this is causing a big problem. In addition, we've got John Stark comes out and talks about Binance as if we didn't need more fear in the marketplace. John Reed Stark is a top official, used to also work for the SEC, and he called Binance a shadow bank, minting their own counterfeit currency while providing limit order books, brokerage, custody, clearing, settlement, etc., with no U.S. regulatory oversight or audit. John Reed Stark, former attorney to the SEC, said this. He said it's also, where's the effect of it's an FTX redux, an epic bank run is inevitable. That's what he says, not my words. And Binance has faced intense scrutiny over the last few months since FTX's implosion, with questions being raised over whether it's able to cover user withdrawals. And in November, FTX, of course, buckled, as we know, and a similar situation could happen to Binance, according to... And he also mentioned things like, look at what happened with BlockFi, Voyager, Celsius, 3AC, etc. Just common. Let's look at banks for a brief second. This is the SI Contagion also hitting banks. These are some of the top banks out there. Very top of the list. Silicon Valley Bank down 46.34%. PacWest 20%. First Republic Bank 15.4%. Western Alliance Bancorp 11.67%. This is huge. I've been always talking about kind of banks are going to get hit over the next couple of years because of DeFi, but they're getting hit now because of this banking contagion. And this is all part of everything that kind of the Fed is doing. I'm talking about them breaking stuff for a long time, but things are breaking pretty fast. In addition, in full disclosure, I did put out a trade alert. I did sell Bitcoin when it broke through what I call level 3 from the layer out model. That's all I'll say on that, but the price is approximately 21,158 if I recall. And it just broke through layer 2 a few minutes ago as I was looking. So it's 20625. Yep, broke through layer 2 as well. So I haven't re-entered, waiting. Not all is sold, but a chunk is sold because cash is important. And we had in fairness, everybody, we had a great run from 15.5 to 25 and down, but there comes a time when we really need to start leveraging stop losses, even with vicious wicks. To be damned. Let's jump a little bit more. So the question is, was the 2023 50% rally a blip in what is continued a bear market or not? And I think we need to zoom out and think, not in terms of bear or bull market, but look at all of the fronts at which crypto and Bitcoin is being attacked right now. And a break below where we are, obviously things are breaking down. People are selling off, and that's just the nature of the beast. And the road to, in fact, back to my layers, the next layer is about 18.9. Once we get through this 20,600 layer. So we'll see. That's when I will start layering back in, if not earlier. We'll see. It all depends on exactly what's happening. Now, there are a bunch of other macro pressures that could tell us where we're going. But remember, this is all triggered by all of the stuff that's happening. But there's more. So this is kind of weird. Sentiment came out and said Bitcoin's social dominance is at its highest level since September, as altcoin optimism has faded. Interesting. When I look at Bitcoin dominance, it's 43.37%, which is very close to what I call the floor of 39%. And Bitcoin actually was selling off faster than altcoins. So I don't know what sentiment was saying with that particular thing. And that was just fresh out of the box too. The other thing that is the other big gray shadow out there in the cryptoverse is Ethereum. Ethereum stakers are feeling max pain again from sentiment here. The new ETH 2.0 staking and Aave V2 supply metrics hint at pain and confidence levels of long-term holders. And that is, there's only so much pain people can take before they have to kind of flip over to cash. It's good to be on the train, but sometimes there are certain times when you need to get off the train real quick. Now, sentiment says the outlook is souring for ETH stakers, as recent gains have retreated and long-term stakers are now down more than 30%. So when they come out, what are they going to do? Are they going to pump it into another L1 or maybe look at Matic L2? So this could bring about some more ETH selling pressure. But compared to Bitcoin today, the alts and ETH are holding up a little bit better. How long that lasts, I don't know. But it's interesting to see. Also, a little bit of bad news out there in the cryptoverse. There was some stuff last week with Algorand and certain wallets, but this is DeFi on Hedera. It's from Hashpack Wallet. Good morning. We have become aware of an ongoing exploit with some DeFi projects on Hedera Hashgraph. The situation is still unfolding, but it seems like it has to do with smart contracts and wrapped bridged assets and possibly liquidity pools on DEXs. So if you are on the Hedera Hashgraph protocol, do your research, check it out. Watch for DeFi. If you have funds on there, get them off as quickly as possible. In addition, there is a couple of little bright spots. First of all, Grayscale Bitcoin Trust shares rose for a second day until they tanked right now. But this is a Forbes article. But the good news is at the time of writing, the actual discount has narrowed to 34%, which is the lowest in quite some time. And there is positive news coming out of that court case where Grayscale is suing the SEC. Now, if we go to the probability of Grayscale winning the case, which would be a good catalyst for Bitcoin and crypto, following the hearing, Bloomberg Intelligence, they believe the SEC, before Tuesday's hearing, had a 60% chance of winning the case. But those odds flipped in Grayscale's favor to 70%, the likelihood of Grayscale prevailing against the SEC. And they expect the court to vacate the SEC order rejecting Grayscale's ETF application. And again, this could be the catalyst we need for Bitcoin. There's another tiny little piece of good news too as well. Coinbase, they dropped $15 million into Mauve, what they call the anti-FTX. It's a decentralized exchange. And we all know what happened with FTX, but Marcus Maya and Philip Banhart, I think, they're the founders of crypto compliance firm Violet. I think that's exactly what we need. Now, these guys, this firm, Mauve, they raised a ton of money from prominent investors like Coinbase Ventures, venture capital firm, FinTech Collective, and also this is, I think, they raised some money from a $20 billion hedge fund called Brevin Howard. So that is a little bit of positivity into the crypto world. It's not all doom and gloom. And just checking the price now real quick. Let me see. Bitcoin continues to Hold on. Hang on a second. Looking at the wrong chart. Yeah, it continues to fall. Again, it looks like we are definitely going under 20K, ladies and gentlemen. Well, there's nothing certain or definite in the future. And other news as well about the damage the Fed is doing. We saw the banks being broken. We've got problems with Credit Suisse over in Switzerland. But here, this is my former professor, Jeremy Siegel. He was on CNBC this morning, and he said the Fed policy is very misguided. Check out his interview. He has very strong words. He says, you've been in the C-19 crisis now for 3 years, and it's hard to argue wages cause inflation when wage growth is way behind where they normally are over the last 3 years. And there has been a structural shift in labor supply. That's probably the most important piece. People are checking out, quiet resignations, great resignation, etc., quiet quitting, whatever they call it. But you have to increase real wages to increase the market, the number of people in the market. But the Fed job, very important here, is not to control a supply side shift. Their job is to destroy demand. And the maniacal focus on labor and salaries is wrong. And the Fed is focusing on items as well within inflation that only make up 20% of the CPI. They're ignoring freight, lumber, shipping, housing market, all ignored. He spoke about the Case-Shiller housing index in the US being down 6 months in a row. Final piece on taxes and crypto and the all-out war, if you could call it that, I'm not sure, but President Biden and his cabinet have a 2024 tax plan to target crypto wash trading. So I do take advantage of the wash trading rules in the US. I don't know what it's like in your jurisdiction, but talk to your tax accountant. I am certainly not one. But this is the whole thing of a like-kind exchange. You know, you could buy Bitcoin at, say, 20,000, sell it at 15, take that $5,000 tax loss and buy it back immediately and claim a deductible loss and immediately repurchase the tokens. So estimates from Wall Street believe this could bring in an extra $24 billion from the government, especially if people are doing a lot of active scalping and day trading. Anyhow, some of the administration's tax priorities include as well quadrupling taxes on stock buybacks from 1% to 4%. We thought there'd be a lot of activity there late last year. It didn't materialize. And also, capital gains will be taxed. This is their plan. I don't know if it's going to go into law at the same rate as wage income for those making over $1 million a year. That would mean everybody will be forced. And I don't know if they're talking about short-term capital gains tax or long-term capital gains tax, but I don't know. But that is punitive. If you're living in, say, California and you're paying federal tax and state tax, 53% of your income is gone. And most people in that bracket anyway make their income from stock options and stuff. So that would be very, very punitive. So with that, everybody, very quick today. That's the end of the show. Thank you all for being here, and I'll see you all later. Hang tough. It's a hard time out there. I can't believe I just jumped on live and there's 1,500 people watching. Hold tight, everybody. Keep cash on hand. This is important right now, and we've been through worse. Bye all.